Good morning, everybody. It's Tuesday, December 31st, 5:25 a.m. Central Time. Grain markets are higher this morning. March corn futures up 2 cents at 4.54 and a quarter. March soybeans up 4 cents at 9.95 and 3/4. March Chicago wheat up 1 and a quarter at 5.49 and a half. March Kansas City wheat up 1 3/4 at 5.57 and a half. March spring wheat up 1 and a quarter at 5.95. We'd like to wish you guys an early happy new year. 2025 begins tomorrow. Mackenzie, do you have any New Year's resolutions?
I don't currently. Do you?
My resolution is selfish. My New Year's resolution is to take a vacation or multiple vacations this year.
Oh, yeah.
One of the perils of owning a business is that you're basically on like 24/7. And I have not taken an actual vacation in like 12 years. So I'm going to take at least one full week off, probably 2 full weeks off this year, which means more work for you, but
Sounds good.
that's okay. I believe you can handle it. All right, let's start off with the funds today.
Okay, so the funds have increased their net long position in the corn market. CFTC released weekly commitment of traders data on Monday. As of Tuesday, December 24th, large money managers were net buyers of 8,000 contracts of corn. Funds were also net buyers of 3,000 contracts of soybeans and net sellers of 12,000 contracts of SRW wheat on the week.
I want you guys to pay attention to what I'm going to say very closely because it may be important. So as of last Tuesday, which was Christmas Eve, the funds were net long 166,000 contracts of corn. Let's look at some past data here. Before we get to that, let me say this. The private groups have estimated that since Christmas Eve, the funds have added to that net long, and that the net long in real time is probably closer to 200,000 contracts. Now look at this chart and look at prior bear market years. Specifically, look at 2014 through 2019. Very often in those bear market years, your fund long, net fund long, would peak around 200,000 contracts, sometimes a little bit more than that, a few times between 200 and 300. There were a couple of years where it didn't even get up to 200. 2017, I believe, was the year associated with the lowest max net long. So if we're, say, 2 years into a 4-year bear market cycle, you might consider the idea that the fund long is getting a little lofty here, and that therefore corn prices could be getting a little lofty. That's just one thing to consider. Maybe on the other hand, this is just a 1 or 2 year bear market cycle, and we're going to dig ourselves out of it, and we're on our way to doing that right now. But I think you might want to at least consider that possibility. That's some good historical context. Soybeans are interesting as well. So the funds are still net short soybeans, but only to the tune of 54,000 contracts. Back in July, the funds were net short a record 170,000 contracts. So you've got just a modest kind of nothing net short in the soybean market, despite the fact that USDA is projecting record world ending stocks, a near record global stocks to use ratio, big burdensome situation in the United States. I can't help but wonder. I know corn has a good demand story. I know we've got maybe some South American weather stuff. I don't think it's much, though. I can't help but wonder if just maybe there's something else going on. Maybe they want to own commodities because they're cheap. But then if so, why don't they want to own wheat? Why does the wheat market struggle the way that it does? I don't know. I have a lot of questions that can't be answered about the fund positioning, but I think it's very interesting.
Corn and soybean futures rallied yesterday prior to a late day sell-off. The March 25 corn contract traded as high as $4.58 per bushel prior to a lower close. This had been the contract's highest trade since June 25th. The March 25 soybean contract rejected trend resistance near 10.04 prior to a close near 9.92. While holiday markets can often be slow, farmer selling has especially increased amid the rally in the corn market.
Well, so I've heard that farmer selling has been increasing for a while now. I mean, really through a lot of the fourth quarter, we had these little peaks in October, November, and again this week. I mean, I was told that there was more farmer selling. So maybe that's the case. There were some big technical areas hit yesterday. So the March corn contract retraced 50% of that sell-off from the May high to the August low. That number was 456. We traded just a couple cents above that and then backed off. We're higher this morning. It looks all right, but that was a key kind of technical thing that I know a lot of people are watching. When you look at soybeans, this trend line was tagged almost perfectly, like to the tick yesterday in March soybeans. If you could get up above that, up above, say, 10.03, 10.04 this morning in March soybeans, maybe that opens the door to some additional short covering and speculative buying, but there were some big technical points achieved above the markets yesterday.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
I loved yesterday's video. So on Monday afternoon, I sent out a text blast to our premium crowd, and I said, what was the number one grain marketing lesson that you learned in 2024? And we had a couple hundred responses come in. We combed through a whole bunch of them. Chris Barron joined me for this video, grain marketing lessons from 2024. I think that if you're a farmer, it would be very good for you perhaps to hear what other farmers learned in 2024. And it was everything. I mean, it was everything from cash marketing to forward marketing to basis to crop insurance to storage decisions. I mean, all sorts of different things that different people learned. Chris and I did a little bit of commentary. Chris kind of did the farmer's perspective. This was an hour-long video. I really thought that the stuff that came in was really fantastic. If you guys want to see the premium stuff, you want to see that video, sign up for the premium subscription this morning, and I will forward you a copy of this morning's email, which includes that video. It's $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
Some areas of Brazil and Argentina will run moisture deficits during the next 2 weeks. Specifically, areas of southern Brazil, Uruguay, and northeast Argentina will see rain totals that are well below normal. Rio Grande do Sul and Piranha, which represent much of Brazil's southern soybean country, are likely to see rainfall that is less than 35% of normal during the next 2 weeks. Even drier weather is being projected for some northeast areas of Argentina.
Here's one map which indicates kind of where the dryness is. Here's a better map from our friends at Crop Profit. If you're a commercial grain trader or maybe you're a fund trader, you should check out what Crop Profit has to offer. It's really fantastic. They don't pay me to say that. They let me use their stuff because I think it's fantastic. In any case, so broken down by state basically or region, percentage of normal precipitation over the next 2 weeks. Piranha is going to see 35%. Rio Grande do Sul is going to see 23%. Those two states account for combined about, I think it's 30% of total Brazilian soybean production. So you've got maybe a little bit of a weather issue in the south, and there's not much rain in the forecast. In Argentina, rather, you go to Santa Fe, and Santa Fe is 19% of Argentina soybean production. You're talking 17% of normal rainfall over the next 2 weeks. So I think there are some concerns with regard to dryness in South America. It's kind of early for these areas. There's definitely time. But again, I mentioned this earlier in the week. If somebody's covering shorts and soybeans, if some fund traders buying them to get out this morning ahead of the new year because they're looking at these maps, I mean, that would not be totally shocking to me.
An ADM shareholder is urging the CEO to resign as the company remains under investigation. Hartwig Fuchs, a former executive at an ADM-owned company and a current shareholder, criticized the CEO for failing to stop the decline in the company's share value. Back in January, ADM disclosed an investigation into its nutrition division's accounting practices. Then in November, the company found more errors in reporting unit transactions and said it would revise some results. Fuchs stated that ADM CEO should have provided more clarity about the situation to rebuild investor trust. ADM stock has fallen about 30% this year, marking its biggest decline since the 2008 financial crisis.
Yeah, some heads have to roll when this sort of stuff happens, and they already had some resignations and stuff. But when your stock is down 31% year to date, while the broader market, like the S&P, is up 20-something%, up 20-something% year to date, yeah, somebody is going to be held responsible. And granted, you know, these commercials, a lot of the commercials, a lot of the entities tied to agriculture, whether it's equipment or fertilizer or whatever, they struggle a little bit given the weakness in the farm economy. But this is especially bad, and this chart looks especially ugly to me too. It really doesn't look very good.
U.S. corn shipments declined last week. USDA reported that 35 million bushels of corn were inspected for export during the week ending December 26th. The print was down 23% compared to the previous week, but up 54% versus the same week last year. Soybean shipments were reported at 58 million bushels. The print was down 12% from the prior week, but up 62% compared to the same week last year. And wheat shipments, they were reported at 12 million bushels. The print was down 17% from the previous week, but up 22% versus the same week last year.
Soybean shipments rocking and rolling, very strong. We're past peak soybean shipping season in the United States, however, and Brazil is going to start harvesting early beans here in a few weeks, and they will garner the majority of the business. Corn shipments, they should continue to be strong, and they'll accelerate once you get into like February, March. That's typically when U.S. corn shipping season is at its best. In terms of competitiveness, U.S. corn is still cheap enough on the export market to garner some business. Brazil is kind of taken over in terms of competitiveness with regard to soybeans.
USDA reported a flash sale of soybean oil on Monday. U.S. exporters sold 23,000 metric tons of soybean oil to India for delivery during the current marketing year. Since the beginning of the year, exporters have sold a total of 174,000 metric tons of soybean oil via flash sales.
I usually don't have a lot to say about the flash sales, but soybean oil is interesting. We really should not be exporting any soybean oil. Stocks of soybean oil in the United States are very, very low. The problem here, I believe, and it has been said, the problem is lack of biofuel guidance. Like we don't have 45Z, we don't have biofuel policy. So those renewable fuels manufacturers in the United States are worried about extending themselves in the soybean market too much, because if the policy backfires, if Trump comes in and undoes some of this, it's not going to work out for them. So soybean oil is an interesting situation right now. The market's kind of cheap despite fundamentals that would appear to be friendly. Just nobody knows what Trump's going to do, what the administration's going to do with these policies. So he said he wants to undo all the climate stuff, but at the same time, I couldn't imagine he'd be a fan of the used cooking oil imports, which have been to the detriment of U.S. agriculture and the U.S. farmer. So I don't know. It's a tricky situation, and nobody knows what the hell is going to happen. And that's what makes this so difficult. I think there could be some volatility in some of these markets once we figure out what's going on exactly with policy, one way or the other. What did cattle do yesterday?
Cattle futures were narrowly mixed yesterday. Live cattle were 35 cents lower to 57 cents higher. Feeders were 15 cents lower to 50 cents higher. Box beef was higher once again. Choice ended the day at 325.37. That was up 2.99. Select ended the day at 294.76. That was up 3.63.
Outside markets, U.S. dollar is about flat. Stocks are up a little, bonds up a little. Crude oil is up about 50 cents. Guys, the markets are closed tomorrow for the New Year's holiday. Of course, we're taking Thursday off because it's a short day. So we will be back on Friday. Happy New Year, everybody. Stay safe. See you Friday.